Welcome to the DSG podcast, exploring the intersection of on-chain and traditional finance. As a digital securities platform committed to open finance, we bring you insightful conversations with industry leaders and innovators, exploring the evolution of capital markets. Whether you're a finance professional trying to raise capital or curious about on-chain finance, tune in for grounded perspectives on where finance is headed. The content shared in this podcast is for informational purposes only and does not constitute financial, legal, or investment advice. DSG does not endorse any specific investment strategies or provide advice specific to any individual's circumstances. Listeners should consult their own investment advisors before making any decisions based on the information provided. Now let's get started.
The 27th of February, and joining me is Stephen Wundke, director at a crypto quant firm, Algoz. Stephen, how are you this morning or this evening in London?
Yeah, good. Thanks, Tim. Good, thanks. It's an exciting time. We never know what hand grenade President Trump is going to throw into the macroeconomic market these days. So we keep on the edge of our seats, don't we?
Yeah, no, it certainly is it's a wild time right now. So why don't you get us started with, how you got into this space, if you don't mind.
Crypto space? Yeah.
Yeah.
Back in 2017, a couple of friends and I recognized the value of the blockchain and created a blockchain business, nothing to do with currencies, simply to do with using the application of blockchain. And because of that, became very familiar with what the blockchain was capable of doing, and then saw the obvious application where transferring assets between one and two places instantly and without third parties involved seemed to be pretty damn special, and how this could have an effect. And then I made it my purpose to get further involved and joined Celsius in the early days, went on to be the head of corporate at Celsius, and then latterly, when that finished, I joined Algoz, the company I'm with now, a very gifted group of Israeli programmers, developers, and financial traders, and delighted to be working with them.
Yeah, no, I remember my first sort of DeFi transaction, that kind of, I borrowed some funds from some decentralized application, and then that was for me, I think, a little bit of an aha for distributed ledger technology, that all this stuff can happen via atomic settlement. Is that similar sort of, do you thought that, or did it start with a Bitcoin white paper or something, or just when were you thinking about it?
I think for me, it was more about the fascination. I mean, we do everything that we do in the CeFi space because we haven't found a way to make the DeFi space safe yet. But the inquiring mind absolutely loves the DeFi space. And from my perspective,
I've got theoretical.
bits and pieces of, and there's probably a couple of $1,000s worth of stuff that I will never find once I go down a rabbit hole and then think, oh, this is unbelievable. I can do this, this, and this. So I wouldn't recommend it to everybody, but once you get a feel for it, it really is exciting at times. But that doesn't have anything to do with my day-to-day job, but that's the bit of it that I love.
Well, I suppose it's sort of, I guess actually we'll get into the strategy and sort of backdrop at the moment, but I suppose having some familiarity, like if you want to invest in Tesla, you want to be able to drive a Tesla car or something and see that side of the due diligence, I think, can be important. So sometimes having a feel for what these assets can do helps understand their potential value, I guess. But
I think if you start trying to do that, though, Tim, it's very, very difficult. I'm old enough to go back to the .com boom, And one of the worst things that ever happened to any of the dot-com companies was when some of them started to make a profit, because then you realized that you'd paid 200x what you should have been paying because of what they were making. When they didn't make any revenues at all, you could pay whatever you want for them because you could dream whatever it was. So finding out sometimes what some of these coins actually do can be a bit of a turn off at times, I suppose. But I try not to to get too carried away with those parts of it. That's just fun. That's not investing. That's just fun
Yeah.
finding out what you can do.
Okay, so is it fair to say that you see the potential of this industry, and then that brought you to Algoz? Why don't you tell us how Algoz operates and its kind of mandate?
I think the first thing to sort of drop back one before we go to that is just simply to say that those of us who are involved in the crypto industry are in the midst of a revolution. Most currencies last about 100 years, right? And the current model, fractional banking, has been going for just over 100 years. And, we're in a position now where the adoption rate for digital currency is following the same path as the internet. And if you'd have told me 10 years ago that my aged, nearly 90 mother-in-law and father-in-law would come to my house with their mobile phones and ask me what the password is for my internet so that they can get their phones online, I'd have said, you're crazy. But they do. And that's exactly the same as what's going to happen here. The digital currency is, whether anybody likes it or not, the genie's out of the bottle. It will not go back in now. And the path is inexorable, right towards the fact this will become whatever currency it is. I'm not saying one currency will rule, but the premise behind digital currency will be the rule going forward, whether that's tokenization, whatever it is. From my perspective, I could have perhaps semi-retired a few years ago, but I thought, well, listen, I don't want to be around and said, yeah, I could have been part of that. And that's what drove me. And when I saw how gifted the guys were at Algoz, I thought, well, yeah, we need to work together here. This is a really special thing. And that's what drives me every day, the fact that we're all part of a revolution. If you're in it now, we're still pioneers. 8% of the world's population's got a digital wallet. And there can only ever be 21 million Bitcoin. And it's the price it is now, whatever that might be. What's the price of Bitcoin going to be when 25% of the world's population has a digital wallet? What's it going to be like when Ripple is used in the banking system across America as a means of transferring payments between each other? This is just extraordinary. And we're living in that part of history right now.
Yeah, I love the enthusiasm. I can see it is a weird one in terms of winners and like how you see things unfolding and how it either gets swallowed by traditional finance and integrated, or it sort of is built outside that system and replaces it eventually when it becomes big enough. You're sort of seeing the latter with ETFs and adoption from banking and maybe even central banks coming to the party and saying, hey, we would like to develop a digital currency. I know I saw an interesting interview from Jack Dorsey. He seems to think Bitcoin's failed if it doesn't act as a currency, as a means of payment.
I don't think it's... Tim, I agree with him. I don't think that's a failure. I think it's established itself as digital gold. It is a store of value. And because of its limitations, it is what makes it digital gold. And so for that reason, it has its place. Gold's a pretty pointless thing at the end of the day. You try and shift a gold bar around, it doesn't work very well, does it? And ultimately, there can always be more gold. But the one thing there can't be with Bitcoin is there can't be more of them. Once we get to 21 million, that's it. So this is very different in terms of, it's more like a Mona Lisa than it is gold itself or any other rare earth metal, because we keep finding more of them.
Yeah. It's scarcity, and programmable scarcity is the key feature for that particular asset.
I don't think it was ever meant to be that currency. Who knows that clearly? But there are things that could well be currencies, and they have that built into them, and we're starting to understand those that can operate at very high levels and still with zero knowledge stuff be able to create the transactional speeds that are necessary. But I've already got a bank account that gives me the ability to work in 6 or 7 different currencies, and I'm talking about 6 or 7 digital currencies, plus on top of that sterling, US dollars, Australian dollars, and euros. And so I'm already deciding what I want to pay with. Maybe I happen to be at the forefront of it, but it's only a matter of years before that's going to happen. With whatever you want to pay with, you'll be able to pay with it.
Yeah. No, I am excited for some reinvention to, I think I heard the last sort of significant innovation in finance was the ATM. So we can do better than that. And let's see where this goes. It has been to my mind though, if I go back to that first DeFi transaction, and I'm like, oh, this is quite cool. And I do think, yeah, I take the point. We don't want to, pets.com, this is the biggest thing that's ever happened. And then it's just like, no, next to zero revenue from fees and things like that. But some of these actually, we had a guest talk about some of the fees, some of these DeFi platforms are, maybe we can dive into that, which are quite high and quite a good return for the coin holder. But yeah, if I go back to that first sort of DeFi transaction, I thought that things might happen a little bit. Maybe sometimes it's that old adage that we underestimate how much things will change in the long term, but we overestimate how much things will change in the short term. But I've certainly been waiting for things to happen a bit quicker than they have. I think in terms of everyday, like you said, 8%. That sounds about right to me. If I look around and see, effectively 1 out of every 10 people I know might use it and hold it. That sort of seems about right to me. Yeah, I don't know. So you're saying we're sort of at the foothills of the adoption.
Yeah,
You
but I
think?
think you talked about that movement forward, and there's been an awful lot of experimental stuff, and that's normal in a new asset class. Right, that's normal, and there's always going to be pitfalls as well. That's also normal. We see that, but the problems that the crypto industry had in 2022, for instance, I often say to people, crypto behaved like the teenager whose parents went away for the weekend. They had a party and wrecked the house, but crypto grows up fast. Our own company, Algoz, we've been institutionally trading longer than most, going back to 2016. And okay, that's coming up for 9 years. But in the hours that we've been trading, which is 24 hours a day, 7 days a week, if I work that back to NASDAQ hours, that gives us nearly 45 years worth of data that we've been trading in the equivalent if we were in a NASDAQ company. So you grow up fast in this industry. So we're no longer the new kids on the block. We're no longer the teenagers anymore. But there are still things that we're working out. A lot of the people in retail are now looking for the 7x, 10x, 20x, 100x coins. And so you find so many of the meme coins coming on board and people buying them. But they have their place, but they're not the serious development of an asset class. They're a byproduct of the fact that people are playing around with the technology. But if you mentioned before about some of the fees, let's talk about Polkadot, for instance, DOT. Now, DOT are between 12 and 15% on a staking basis. This is a very, very good coin. I happen to know the people involved at that level, and you can do some liquid staking with that, and you can have some of it invested in other places, and there's a very good role there as a coin. There are others, of course, as well. It's just one I picked because it has a particularly high yield, and I think they're a very, very strong case. Now, are they going to go 10x from where they are now if you own the coin? No, probably not. But while you're staking and earning that sort of return, if they go 3x from here, you've had a fabulous return on your investment. But there are different people. The crypto natives who've been around for a long time are still searching out there in the retail sense for the coin that's going to be 10, 15, 20, 100x. Whereas actually businesses like our own are now saying, okay, we've got an asset base here that we know how to trade, where we can produce returns with drawdowns of 10%, making 40% net of fees on an annualized basis. If you're holding the coin as well, you've got the asset appreciation. What more do you want? It won't be available forever.
Yeah, no, I agree with that. That makes sense. With the meme coins, you think they sort of sometimes, you're seeing now in Libra and things like that. Do you find that sort of the space can take because a lot of people perhaps have some pretty harsh lessons in this and then maybe get burnt, and a lot of that stuff I feel like gives the industry a bad rep sometimes. Well, it certainly does with this Libra business.
I've been involved in the finance game for ages, and anywhere where there are big profits to be made, the retail customer normally gets ripped off, right? And it's mostly because fear and greed are the things that drive markets. And when people see big returns, they come chasing it. It goes back to horse racing. It's no different to placing a multiplier bet on a Saturday and hoping that your $5 is going to generate $500 at the end of the day. That's the riskier end of the marketplace. It's not the serious part. It's fine because a route and access to money for people who are creating a really good technology is a good thing to have in the DeFi space. I've got no problems with that, but you need to know what you're doing if you're going to play in that space. As I said, we don't touch it as a business simply because we haven't found a way to make it safe. Cross-protocol hacks, things like that require you to monitor things in a far more difficult way than the CeFi space just isn't appealing to a serious investor. And our biggest challenge at the moment is convincing traditional finance that the CeFi space in cryptocurrency is a safe place to be. Now, we're not going to do that by telling them, hey, let me tell you about this meme coin, right? It's not a conversation.
No. Well, on that then, do you want to, how does that conversation go? You've probably touched on the potential. What about in the way that you sort of said, Algoz uses traditional financial infrastructure to build its product, really? Is that, how does that work?
Well, we treat, I try to break it down to people when I'm talking to them about cryptocurrency and say, listen, first of all, the reason we're able to make the returns that we do, an average of 40% net of fees for our flagship strategy, is because this is a volatile asset class. And if you are a systematic trader who has strategies that are proven over time, then the ability exists to make those what would be deemed in traditional finance outsized returns. But we're not doing anything that is outrageously clever. We produce results because we have more data than anybody else, because we've been doing it longer than anybody else. And back in 2016, 17, and 18, we applied traditional finance strategies and adapted them into the crypto space, and had to develop everything in-house because crypto technology didn't exist. So we built everything ourselves. And then worked out a way to try and make it look more investable by those who said, hey, what's this stuff you're doing? And I say to people, it doesn't matter whether we're trading Bitcoin, Ethereum, Solana, Sui, XRP. We're just trading them. They're numbers that go up and down on a screen. And we're trading them. They could be called pork bellies, orange juice, whatever else. It doesn't really matter. You don't have to own them. We can use dollars. We can use whatever currency you want. You can own Bitcoin. We can trade the collateral of that for you as well. The simple fact is, we as systematic traders have data sets that allow us to make informed decisions about where we think the marketplace is going. And we won't be able to do that forever. As traditional finance comes in, they will suppress the curves, because the more money that comes into the marketplace, derivatives are designed to smooth out curves. That's what they're designed for. They're not there just to make money. They're there to smooth out the curves. And that's what they'll do over time as more money comes into the marketplace. So the 40 we made this year, last year, and the year before will become 35, 32, 28, and there'll be a normalization to it. But we've probably got a few years left before that happens.
Yeah, cool. And is there, so I was just sort of interested, that was you went a better direction than I went in what my original intent, which is just try to figuring out like because I've often thought that a firm, like, and especially with the way that you've explained the potential for blockchain, you can almost try and build something on the blockchain to sort of like custody and all of that sort of end-to-end thing. That could be the next thing, maybe.
We already started doing that, Tim. Yeah, we've already started doing that. We work with partners to create a model that eliminates exchange and management counterparty risk. We're the first company to do that, so that you don't have to worry about the hack that happened to the other day to Bybit. That's not going to affect any of our customers ever, because the company never possesses their assets. So in principle, what we've designed that's unique to us is that, let's imagine you've got $1 million worth of Bitcoin, right? Rough speaking, 10 Bitcoin when it was 100,000. So we place that into a custody wallet where you remain the beneficial owner of that at all time. And using the blockchain, we then invest, we then trade the collateral of that at the exchange. So the coins never leave the wallet, but on the blockchain, you can see those at all time. You can see they're protected. You remain the beneficial owner. If there are losses, we settle from that wallet on your behalf. If there are profits, we put the profits back into that wallet. So ultimately, if we go broke, it doesn't matter. We never had your coins. If the exchange goes broke or gets hacked, it doesn't matter. They never had your coins. And even if the custodian goes broke, what we've insisted is that they're held in trust and not an asset of the balance sheet of the custodian. So you remain the beneficial owner at all times. Nobody else currently has that, but it's a technology we've created to make it a safer place. That's why we did it.
That's very cool, actually. So how does it work in terms of making the kind of liquid the custody deposit from the client? Do you borrow against that from another party? No.
Well, you would. At the moment, no, there is no borrowing involved. There are some exchanges who are happy to fund against the collateral. They have a lien over the wallet for trading purposes, and we can only trade the collateral of the wallet. So, for instance, if you give me BTC, ETH, or USDT, for instance, we'll trade 100 cents in the dollar compared to what you've got there. But if you gave me XRP, I might only be able to trade 70 cents of the dollar. So if you gave me $1 million, I can only trade 700,000 of it, right? And that's fine, and we make that work equally as well. But that wallet which is created for you is visible on the blockchain with the assets in it at all times. So you can see. We also give you a GUI login so that you can see the trading that's happening at the exchange level in real time as well. So you don't have to wait till the end of the month. I mean, I believed some time ago, a couple of years ago, that the hedge fund structure had no place in cryptocurrency. And the reason was everybody said, hey, I've got a hedge fund and it's regulated and it's audited. And everybody goes, oh, well, great. Well, that makes it legal then. And then the first thing they do when they raise the money is they take all of that wrapper and they stick all of that asset value straight into an unregulated marketplace, which crypto was, right? That's disingenuous. It's just putting a wrapper around the outside of an investment vehicle that presumes to be legitimate. Now, we've gone one step further and said, right, let's give everybody instant access. They want their coins back. We just trade one wallet for them. It's theirs. They can have it. And that breaks down the barriers. And that's what I believe is important.
Yeah, cool. So you really are, in a way, using some of the technology as sort of embedded in your product.
Absolutely vital. Yep, that's the point. Do things that aren't possible or weren't possible before because of the visibility that the blockchain, it's a ledger at the end of the day. It's an immutable ledger. And so ultimately what we've got is something that you should be able to use all the time to protect yourself as well, right?
Cool. That's a good background, thank you. And I think sort of setting the scene for maybe what you guys think going forward in this space. You mentioned sort of adoption and maybe
Yep.
more institutional involvement. How do you see where we are presently and in the state, and what sort of risk management are you thinking is appropriate these days? Yeah.
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 I think we're at a crossroads right now. I was in Hong Kong last week and Miami 2 weeks before that. And the institutions that we associate with traditional finance, the family offices, the fund of funds, the asset allocators, the big asset allocators, investment houses, they're not necessarily writing checks to invest into the space. They're asking all the right questions. They are doing their due diligence on the space. And those that show they understand risk and manage it well are the ones who are benefiting most going forward. It's a big year. And I think if we can avoid any huge problems in the space, and let's imagine that Donald Trump is true to his word and he makes the regulatory framework in America a lot more viable. None of us mind regulation in the space. In fact, we welcome it in the crypto space. What we don't like is not knowing somebody coming to us and saying later on, hey, we've changed the rules, you're illegal, you're going to jail. That doesn't help anybody at all when we've got a guess. So as long as they give us that framework, in the US, and a lot of people don't know, 40% of all US adults have a digital wallet already. They haven't done anything with it for a few years because they're too frightened to do anything. So this is a huge marketplace that he can open up. And if they did become a digital powerhouse, then they've got the adoption rate to make that happen. So that's one big thing that may happen in that part of the world.
Yeah, that's certainly, watching the states go from sort of the prior SEC more litigious version to something a little more pro is definitely a tailwind for sure.
Yep.
And where do you think sort of like how it must be hard when you're looking at numbers on screens and you're trading, and then you're also trying to marry a long-term macro view. How do you guys reconcile the two, that a chart might look terrible and at the end of the day you might be better just to hold for a long-term position?
Yeah, we don't do anything discretionary. Everything we do is systematic. So the algorithms dictate how we trade on any given day. By way of example, if you've seen, and we're talking on Wednesday here, if you've seen the pullback again by Bitcoin, it's, for anybody who's a chartist, it's a classic head and shoulders formation. There's nothing new about that. People have been looking at those formations forever, and it's behaving in exactly that way. That's not to belittle those who read into it, but that's exactly what it looks like. I think that for us, the marketplace itself, we always hoped would divorce itself from the macroeconomic traditional finance areas. In fact, it hasn't. And actually, that's because people are now treating it as an asset in the same way that they talk about other commodities, oil, gas, etc. So you can't have it both ways. If you want to be adopted by traditional finance, you have to accept that they are going to make investment decisions based on the macroeconomic environment, right? So for instance, the next key date for anybody who's holding digital currency is the same as the next key date for anybody who's holding equities. It's March the 19th when the Fed decides if they are going to cut interest rates or not cut interest rates, or they're going to be hawkish or dovish, right? That'll make a big
Yeah.
difference. Dovish calls,
Gosh,
we'll go back above 100 by the end of April.
I have to say it's just a incredible thing that there's so much human capital dedicated to understanding what the Fed will do.
Yeah. And
It's not
analyzing
just
every word, Tim. Analyzing
yeah,
every
yeah.
word.
It's a bizarre part of finance, and I don't think,
It really is.
if I understand, maybe from your experience and let's say, a bit more veteran finance people, it didn't used to be quite so focused on just that fact. Like, I don't know.
Um,
That's my understanding of
I,
the
I,
90s,
I,
80s, and things.
I disagree a little bit with that. I've been trading since late 80s, early 90s in the space, traditional finance space and onwards. And we were constantly, the difference now is the communications are so good. We had to subscribe to CNBC to get a read on things in the 90s, which was terribly difficult for the average person in the street. These days, the network of communications means that every word goes out and about really quickly for everybody to analyze in real time, and their AI bot has already analyzed and sent them a report from the time the person says the last word of whatever speech they're talking about. So the
Yeah,
dissemination of information is that much quicker, stronger, and further out there, that everything is analyzed. So I think that's the
yeah,
big difference.
yeah. No, that makes sense. And so how does the algo work in layman's terms? What's the sort of how maybe the weightings, or how it sort of thinks about, or how it's programmed to operate as a
Our,
risk
our,
management tool?
our algorithms, we
Yeah,
run 3 strategies for our clients, all at different risk levels. So we run one which is what we call market neutral. It's a relative value. We're looking at the top 30 coins by market cap, and we're creating pairs, up to 200 pairs. And over time, we know the relationship between those pairs, and we're looking for imbalances. So in essence, if we bought $200,000 of Bitcoin, we might sell $200,000 of Litecoin. So your position in the market is 0, but you've got one coin against another. And we'll do that with 200 pairs. That's a very low volatility, 17 to 20% net of fees each year, maximum drawdown less than 4%, rock solid. For some crypto natives, not very sexy, but to the average person who's got a hedge fund at the moment, who is struggling to make 8 or 9% in traditional finance with 5% drawdowns, this has got a sharp of 2.5, 3, and ultimately they're going, wow, that's amazing. So that's our base risk offer. That's how that works.
When you say, do you compare returns at all to you compare it to US dollars or stable or something? It's
Absolutely.
all
Yeah, we
yeah,
look
of
at
course.
we compare our returns to the S&P 500, for instance. What does that look like as a whole? We're constantly looking at where that fits, and the headline figures are pretty easy. We then run a multi-strategy, which is the one I was talking about before, that has 6 different strategies in it that all work, that are able to work together without competing against each other. All of these have a very low correlation to BTC, because ultimately 80% of the revenue that we look after for clients, their asset that they hold is Bitcoin. So they don't want us to have a high correlation to Bitcoin, because they've got exposure to that already. So then we run the multi-strategy, and then we run a momentum strategy, which is agnostic about direction. It'll try and predict market performance up or down. At the moment, it's in bear conditions, and it's making good money for those who have Bitcoin and just want to run it and have a hedge against it. So that and those algorithms have had data being fed into them for 8-9 years now, and they evolve. And there's a great saying about algorithms, that they're good until they're not. And most times the reason that algorithms become obsolete is because they don't upgrade with the changing market conditions. I'll give you an example of that. Last year, 11 of the biggest asset managers in the world entered the crypto space. Admittedly, it was with ETFs, but ETFs started being traded. They were now trading in the options market to offset their ETFs. They were also trading in the spot market, again, to hedge positions. Nobody had ever seen positions like that before because they didn't exist until then. So your algorithm has to evolve to take into account that level of trading. The trading conditions started to change in the market, and we developed and evolved. And I often say we trade this multi-strategy, which has 6 sub-strategies. It's a bit like the first car I bought back in whatever year it was. It only had 3 gears. It's now got 9. Our multi-strategy back in 2019 only had 3 sub-strategies. It's now got 6, and they all work because the market's evolved.
Oh, all right. Well, that's good. That's good overview. And now we're sort of saying there's a sort of bear conditions now, but you think that's classic head and shoulders, perhaps? Yeah.
Yeah, I think so. You've got to think that the dominance of Bitcoin it's about 60% of the trading volume in the marketplace. So where Bitcoin goes, most others follow. There's been a very poor altcoin market in the last 9 to 10 months. It really hasn't followed to the same extent. Most of that, I believe, is because the altcoins that sit in market cap from 3 down to 20 are less appealing to retail now because they're out searching for the next 20, 50x in the meme coins and the shit coins, right? And so therefore, you're not seeing the same volume. You're seeing serious money in Bitcoin and Ethereum, but you're not seeing the same volume that we used to see in the altcoins, which is why they have underperformed. Now, that might change. We might see an involvement in the coins 2 through 10 when traditional finance starts to understand the use case for those coins and say, hey, these guys have really got something to them here, right? It hasn't happened yet.
Yeah. No, I agree with that for sure. I've been very disappointed, I should say, with sort of Ethereum in the last 9 to 12 months. But
if you look at the revenues of Ethereum, you know, they tried last year with their various upgrades and things, and the revenues have not appreciated at all. They're really struggling. So when you analyze the revenues, it's hard to get excited about it. Now they've got another upgrade coming in a month's time, and it may be that this again improves things in their marketplace, and maybe we'll get excited about it again. Maybe you'll see the revenues start to return again. For the moment, the outcome isn't great in terms of the short term. It's a good coin, don't get me wrong. They're really good at what they do. I often say to people that if you want to build seriously, you probably use the Ethereum platform. If you want to build for fun, you probably use Solana, right? And maybe Sui to an extent below that as well. But you know, Solana are very much the Red Bull of the crypto world. So, you know, Red Bull all out there, sexy, doing all the exciting stuff, sponsoring this, doing that. All the kids are out there. They want to use the Solana platform. Of course they do. I get that.
Yeah.
But when you get to big business that's proven under huge numbers, it's probable that build will happen on the Ethereum platform still going forward. Maybe I'm wrong. It's just my view.
Yeah, I agree with that. And I certainly think the next sort of wave in adoption that will help drive a rosier fundamental picture for the space is the real world assets moving on chain. If we can see that sort of starting to take off, then and people and thing, you know, such as Algoz using structures like you guys have created, and just being able to being sort of what you go going right back to your earlier statement about, seeing the potential use case for distributed ledger technology and building
Yep.
on that, then that hopefully will help drive better performance and certainly and the blue chip being Ethereum at this stage, they have focused a lot on trying to be that sort of blue chip
They have.
coin.
Yeah.
And I
I
think
think you're
maybe
going to be
the founder.
frustrated. Yeah, I think you're going
Sorry.
to be frustrated. You mentioned when we were talking earlier about how long things take to happen. There's no doubt
Yeah.
about it that real world tokenization will happen, right? I think it's going to take longer than everybody thinks, simply because it's a paradigm shift to, we all know the figures look great on paper, and why wouldn't you want it to be able to tokenize projects and release those assets into a marketplace where people could take advantage of it? The regulator is going to have a say in it. It will take time for people to build confidence in it. And I just think that's a little further off. I think we're going to get the acceptance of the asset space as a trading venue during 2025, as more people come into that marketplace and start trading it, and the volumes will start to get up. And then the tokenization will come on the back of that. So I think we're still into 2026 before you and I can say, do you know what, I fancy some of that building project that's happening in Singapore. I've seen that's being tokenized. I'd like some of that. And then someone brings that to me and says, I want to use this as my asset. Can you trade that for me in the marketplace as the collateral? I want to park that in a wallet at custody. It's worth 2 million. If you can trade 1 million of it in the marketplace for me and make it have a yield value to it, now I've got a yield bearing asset. Thanks very much. It's where we'd like to get to. I think we're a little way away from it yet.
Yeah. And then there's kind of, from a regulatory perspective, there's that kind of AML stuff, which it's kind of like the TSA or the thing before you get on an airplane. It'd be great just to get on an airplane and go wherever you want, but you've got to wait in a queue and go through all these things. And I feel like that stuff is really, it has to be done, and it's got to be done well. And maybe there'll be advances in decentralized identity protocols that regulators can have trust that it shares that information and things. But that space is certainly a limiting factor, I think, in adoption and just the user friendliness of it.
I saw some examples of that are out there now, that are creating on the blockchain the ability to do the KYC and AML in an automated space. That'll happen. You'll still have to provide all the information. You'll still have to take your pictures and all that sort of stuff. But that's the way it's going to have to be. And I have no problems with that. It actually gives us more credibility, not less, because ultimately, and when I hear people say, oh, well, it's just for drug smugglers and arms dealers, right? That we can track every coin back to base. That we can identify wallets. When you look at the hacks that happened, I know Bitfinex got back 9 billion from the US government from something that happened to them 9 years ago, because they were able to track it and trace it. So that's the use case that gives confidence. But the clunky bit is always going to be the start space, because of the things that you said. The lining up at the airport was your analogy. Exactly right. There's no way around it. We're trying to make things safe, right?
And one other area I'd be interested for your views on is AI, and how do you think that? I mean, that's taken up. That's certainly probably one thing for me that's bucked the trend in terms of how quickly it's come about into the sort of real economy. Where do you see that in terms of? I mean, I know I've seen stuff that suggests that AI agent economy is all going to be using crypto rails, or some suggestion of that. And also, there's another sort of way you can take it as well, is do you guys at all have AI enhanced sort of algorithms at all? Are you
Yep,
using AI to
yep.
help with your development of the
All of
algorithms, or what is it? Yeah, how does that
no,
machine learning
it's a key part of what we do. I mean, let's have it right. It's not AI, although we call it that. It's all machine learning, and we'd be crazy. We've been using it since 2022. The key part of what we do, I mentioned we have a multi-strategy that has 6 subparts. We give the AI part for each sub-strategy a percentage between 5 and 10, 15 and 20, 30 and 45, and the AI part rebalances the portfolio to maximize the market conditions that we see. It does that on a monthly basis. So it's not making trades as such, but it's rebalancing the portfolio. And that's a key part of what we do. We run our own test stuff using AI behind the scenes to see if we can enhance performance, but we're not in a position yet where we want to allow it to trade in that way because we don't trust it yet and we're risk averse. But the balancing of the portfolio, it does brilliantly. And that enhances our returns because it optimizes. That's where it's useful, in optimizing our algorithms.
Cool. So it sounds like there's more of a machine learning, traditional sort of quant machine learning process within
Absolutely.
the strategies, and then you might be also working alongside, maybe language models and things just to help or understand how, where it could improve and things like that. Is that a
Yeah, I
fit?
think not so much the latter, but certainly we're keen to work out how we've got some very, very clever. Our founder and CTO is a genius, without doubt, and I don't use that word lightly. And the inquiring mind is always trying to see how we can use this better. In the learning part of what we're doing, it's understanding the nuance of market trading that'll be the big development of it. Not necessarily just a pure harsh figure, but actually what does it look like based on the other. I'll give you an example. At one stage we would be looking at 6,000 data points. That's reduced down to 4,000 because you realize over time that 2,000 are just noise. Be nice if we could learn what's noise a lot quicker, right? And then ultimately get better, cleaner, purer signals. Okay.
Cool. It's an excellent use case. I think if you can figure, because I mean just the general thrust of it is that it's improving everybody's ability to analyze stuff at the moment. And then the second part of that AI question was, how is it? Do you feel like it's a complementary technology, AI agents, that space? Are you seeing anything that would indicate that crypto and AI have a shared fate?
It's an interesting one. We want to protect our IP as much as possible. The ability of AI to analyze our trades might allow an AI bot to be able to replicate what we do in the marketplace and make itself available for any person to be able to sign up to. We think that is a threat to us as much as anything, because it would just be mounting on top of the data sets that we possess, which is part of our asset value, right? So that's the guarded part of it. There are a lot of AI trading bots out there now. Most of them are rubbish. And again, retail will get caught in that because they just don't have enough history to them. But that fear that I just described is the one that we need to protect. Now, we have to find masking agents to our trades to be able to make them look different to what we're actually doing, so that when the bot comes onto and finds a way into where we are, that ultimately what it's seeing is not what we're actually doing. Does that make sense?
Yeah. And I certainly think it will be a wee while before we let these AI agents or things just completely loose without having any oversight, So I wouldn't recommend anyone who thinks that there's an AI bot copying your strategy to invest in that, for example, without having detailed understanding of how it's doing that.
Absolutely.
And I don't think that's anywhere soon around the corner. And even if you could, have that sort of confidence, I'd still think some human risk manager as part of the process is important. Anyway,
But
well,
the AI bot can look like anything that it wants. It will
yeah,
know how to create a website that it can do in no time flat, that says it's got all the regulation that it should have and all those things, and it won't have any of it. Ultimately, who's responsible for it? Who can find the ownership of the AI bot to know that what it's doing when it's making profits out of people losing money, let's say, that those
yeah,
profits aren't being siphoned off through there to somewhere else. There's a whole can of worms there that is, I don't think we're quite ready for yet. So we contain it, but it's a scary look into the looking glass in a number of ways. It's exciting, but
yeah.
it's also a bit scary.
Well, that's interesting because I thought you would go with it as it being another opportunity for the crypto space, but it sounds like, and you've identified, I think, quite fairly, as a few risks. More sophisticated scams, a lot of replication, and yeah. So, is there anything you've got on the positive side on that front, you think?
Yeah, I think it's allowing us to do already. It's allowing us to do R&D stuff at a far
Yeah,
quicker pace, and that's
yeah,
brilliant. Yep.
yeah.
So that's
Even
the
for the
positive.
protocol builders, you think? Yeah,
Yeah, definitely.
yeah,
All over the place. I think that's brilliant. And
yeah,
I'm a great believer in it. Listen, I might have been slightly negative protecting our own positions and my fear about what might happen again to retail customers. But ultimately, the AI abilities are going to, controlled in the right way, make the world a significantly better place. Take healthcare, for instance, right? The ability of people all over the world to be able to combine data in their development that they're doing and have AI analyze it will come up with cures to things that might have taken 10 years in 1 year because of the
yeah,
data that AI is able to go through and pick out the salient points. That's exciting, right? The world becomes better.
yeah.
But money's a worry.
Absolutely.
Always remember that there's one thing. There's a guy called Willie Sutton, and Willie Sutton in the 40s in America was a bank robber. And when he got in front of the judge for the third time, the judge said, "Willie, I'm going to have to put you down for a long time. Why do you keep robbing banks?" And he said, "Because that's where all the money is." So wherever there is money, someone will find a way to try and steal it from somebody else, right? That's not specific to crypto. That's specific to money generally. My first boss in security boss said to me, "Always remember, you've got a target on your back. People are spending millions to steal billions." Now, that applies wherever you are. Anybody in traditional finance is familiar with that saying, right? Because there's money around, somebody will find a way to steal it. It's not the asset class's fault. That's human nature.
Well, hey, that's we can probably find a positive way to finish, but I certainly think, yeah, I've really enjoyed talking to you. It's been interesting.
Good.
Um,
Good.
and yeah, thanks very much for your time. Do you want to tell people where they can, find more information about your firm or you, or yeah?
Yeah. Well, I'm easy to find. I'm on LinkedIn. You'll find me there very easily, and I always respond if somebody wants to link up in any way. We're algoz.io on a website. You'll find us there as well, and you can get hold of me anytime. I'm always happy to talk to anybody. And whatever I might have said about the fears and problems about things, this is the future, right? We're in the future. We just have to get it right. That's all. And we won't get it right every time, but we'll mostly get it right, and we'll move it forward, and we will change people's lives. Farmers across Africa are going to have a position where they're going to get their crops paid for in a digital currency, where their banks can't touch it, where their governments can't touch it. And finally, they'll be free from the chains and develop into something pretty damn special. That's just one use case. Okay.
Awesome. Cool. Thanks very much, Stephen.
My pleasure. It's been great talking to you, Tim.